Hey guys, Lancy here. Hope everyone's doing well. Thanks for joining me to look into some more MTG markets and see what's going to happen with reserve list cards, especially dual lands and obviously a revised edition. Now, if you guys like this video, please like and subscribe. It will help me stay motivated, I guess. But I also got access to the community posts. I'm glad that people got back to me. I'll stick with the magic stuff and post some other stuff on the side as needed, or at least as long as I feel like it. Thanks for joining me, guys. So let's get to it. The first things first, let's have a look at what all of the dual lands are doing for the revised edition. Like I said, they're the most fluid, easy to keep tabs on. TCG players no longer delivering to Australia. I think I mentioned that in my previous post. What a surprise. That's kind of annoying, actually. But I might have to look to my local game stores, assuming that they have what I need and don't charge an arm and a leg. But going right to it, Badlands, nothing. This is actually quite impressive. It has been flatlining for a long period of time. But you can see that the prices on TCG Player aren't too bad. Bayou, still moving up. By the looks of it, there might actually be another. Alright, I'll come off right at the back. There might be another leg up for all reserved list cards and all revised edition dual lands. I'm saying that because currently we're all waiting for a Federal Reserve announcement that's going to come out in November that says that they're going to start beginning tapering of their bond purchases for mortgage bonds and stocks. If they go out and do this, the market's already kind of priced it in. I'm expecting the market to be like, okay, fine, but until interest rates go up, we don't care. And the US dollar may actually continue to decrease in value, which will obviously affect prices of assets. And we'll get to that at the end. So Bayou, yep, flat, moving up. Plateau moving up as well, no longer flatlining. It is actually pretty steady still. Like, I wouldn't go too crazy about it. TCG players says $270, but we'll have to see. Savannah still moving up. Scrublands kind of flatlining to heading back down a bit. Might just be cooling off. Tiger still moving up, which is unfortunate. But, okay, not that one. I did notice there was a Tiger on sale for $274. Now, that's a moderately played. You have to be careful with that. But that still feels like... And I saw another one. A couple of weeks ago. Two of them moderately played for like $250. I should have got it, but I think that I ran into the same problem as before. I just didn't realize it. Where TCG Player just didn't ship to Australia, so no longer can have access to that. Moving on, conditions. Tropical Island, so slightly on its way down. I would probably say this is a tricky spot to pick up, but depending on what kind of deal you can get, that's up to you. Tundra, flatlining, not really moving much. Underground Sea, on its way down, but mostly on the flat, nothing crazy. And Volcanic Island, flatlining as well. Now, one of the most important things to remember is everyone that bought in a while back, because I started doing these videos in February of 2021, but the smart choice would have been to buy. I think I was buying middle of June 2020 or early 2020, April, May, June. So if you bought in at that time, you're sitting on a bit of a profit. And a lot of people could sell out at any time, but they're not going to sell out until they think the market has turned. And currently, there is no clear indication that the market has turned. While it might look like it has turned, in the larger scale, it is still very bullish. And the reason why it's bullish is because the value of all currencies in the world is still on its way down. Like, have you guys tried to look into housing or anything like cars? Anything that has an auction, people are paying cash value, like above and beyond what normally people would ask for. Like an auction here in any suburb, it's all auctions. Like, in 2019, you could go to a house, do an inspection. If you found some issues, you could probably ask for a lower price because the house had a sale price, like a sale range. And you could actually ask on the low end. Good luck trying to do that in 2021. If you ask on the low end, you're not going to even get a chance to step foot in the house. So you're going to have to go above and beyond to even begin with. So I'm just saying that inflation is what we're betting against. So that's the reason why we're looking into crypto, reserve list, and all that. But you never want to go all in at once. You always want to step your foot in. The smartest thing would have been to do is always just put aside some cash. When you have enough to buy a reserve list card that you like, you buy it and then move along to another purchase in the future. You don't just borrow hundreds of dollars and then you can do it. It's just risky. So if I look at even this scary looking graph, it actually looks kind of scary. If you look at it right now, this is a revised edition, full market cap. You can say this is everything that is in revised editions market. This is what a box would cost. It peaked in February and then again in March at around about $8,500. Let's say at around about $8,500. Now it's sitting around about $6,841. That's almost a 15, what is that, 15, 20? I can't do math, 20% drop. That's a big drop. So you certainly wouldn't feel too good if you started getting into reserve list cards in the middle of these 2 months. But on its way down, when is a good time to start picking it up? Because you got to remember that if you're stepping into it, you have to be consistent. And even for me, like that Tiger, I'm eyeing that all the time. But if TCG Player was not offering, then I'd have to go somewhere else. And I think other places are more expensive, but eBay might be an option. So I kind of want to build up my set, and I've been holding out for a while, but it looks like now might be a good time. Now, I'll continue talking about what I think is going to happen. So I just want to show a quick graph about the Federal Reserve balance sheet. So this is the Federal Reserve. They put the money they provide liquidity to banks so that the banks can lend. And they have been very consistent about doing this. You can see this massive spike up in 2020, and it has just gone exponential since then. You can see this in a better graph. So 2019, a bit of a drop. September 2019 jumped up, and then obviously March 2020 straight to the moon and all the way across. So you could see that building for a while, and it's going to provide a lot of liquidity. Now, one of the most interesting things is how to prepare for rising interest rates. So I just wanted to come down to to refinance your house. Nope. Reduce your risk. All right, so rising interest rates means, okay, so this is for rising interest rates. I'm not expecting that to happen anytime soon. Inflation impacts on your magic investments. So this is from Quiet Speculations, and they do a quick chart on what they think is happening. So you can see that reserve list cards buyout, I assume this is not the case. CPI for 2021 come in extremely hot. It did. This is actually an old article. But if the inflation continues to pick up and there's less movement, because even shipping costs are super expensive right now. To send something from anywhere internationally, not only would you have to pay an arm and a leg to send it, there's a pretty high chance that it might not actually arrive at the time that it said it will arrive. It's really hard to even find a time frame when you can get some of these deliveries, and most of them are just out of stock or they won't deliver in time. So I'm expecting this to be a huge run up in the next couple of months till Christmas, and then after Christmas, I think things will calm down probably around about February, March next year. But before that, I'm expecting some crazy things to happen over Christmas. Pretty much no one's going to be able to get anything. So if you want to order anything now, order it now. I think that's pretty clear. But if you want a bigger TV, if you want a cheaper TV, if you want a PS5, anything, order it now. I'm just saying, if you want to order it during Christmas, like a week, 2 weeks, 3 weeks, end of November, you're too late. Anyways, moving on. Another thing that I wanted to point out was, where is it? No. Ah, that's right. So I wanted to have a look at alternative investments. So this is from Business Insider Australia, and they're talking about other investments to probably invest in if you want to bet against inflation. Now, we obviously understand that something changed in 2020, and inflation is now very much a risk when it hasn't been a risk in my lifetime. Since I'm around about 30, 35 years old, I've never had to worry about rising interest rates that stayed high for too long. They never stayed high for too long because that just caused issues in the market. So the Federal Reserve and everyone else was happy to lower that so people could be happy to borrow money to buy stuff again and again and again. But after all the liquidity that's been pushed out of the market and the low interest rates staying and people saying that they're not going to increase interest rates, people are starting to get way more confident to spend 20, 30% on certain items that are asset and collectibles. So if you look at collectibles, you got fine art, vintage cars, and other collectibles. Magic cards are part of this. Pokemon, old video games. Like, it's crazy what's on the list, but as long as you can keep in good condition, you're going to be able to sell anything that's old enough and has some value for most of the people. So again, these are real assets that have intrinsic value to collectors. Although their prices might be hard to predict, the value of these items are expected to appreciate over time, providing returns greater than the inflation rate. So let's say the inflation rate is 5% a year, which is really high, by the way. They're expecting that most collectibles that people want will increase more than 5% a year, which means that you're betting against inflation, which is good. Another one is cryptocurrencies. Obviously, hopefully no bots come in. I'm talking about this. I'm not going to put it into my title. Crypto obviously makes a big difference. Another one, real estate. Well, I mean, if it's real estate, then I can talk about that later, but it's impossible to try to get into real estate right now. Commodities, gold and silver, and stocks. Well, we've seen what happens to most stocks, especially the ones that do well in low interest rates environment. So, what is the overall idea for the next couple of months? Now, in my head, unless the Federal Reserve surprises everyone and says that we're going to start looking into raising interest rates and raising interest rates faster than we expected because inflation's getting out of hand and people are starting to get angry and fed up with the inflation and people are getting hungry and there's riots, like there's some big issues, then things might change. But right now, a lot of people seem to be quite comfortable. Maybe it's because they own these assets. Maybe it's because a lot of people actually are relaxed when it comes to inflation. Maybe they make more money than most people would have expected. But a lot of people don't seem to be throwing up their arms and going crazy about rising prices. So I'm expecting the Federal Reserve to just kind of sit back and go, well, if you guys are happy with the rising prices, then we're happy letting the prices rise because that just means that everything that we want to happen in the economy, which is everyone works for less money to make sure that they have no time to think about anything else, is actually perfectly fine for us. So we're going to let that happen. So I feel like if you want to predict what's going to happen in the market, just have an eye out for unexpected good or bad news. Good news in the market, good news like full employment, people are making more money, the wages are going up. That's the virus is taking the back foot and no one really cares about it because everyone's got their vaccines and the vaccines are working. If all of that happens, then that actually is bad for the market. That's bad for collectibles. That's bad for housing because that just means that the Federal Reserve and the rest of the other countries that are involved will have to raise their interest rates. But if the other side happens, which is things are going back into lockdowns, things are slowing down in the economy, things are not looking too good, people are losing their jobs, the wages are not increasing, then the Federal Reserve is just going to come out and say, look, we want more inflation and we're not getting it, even though this is all the inflation we have and this is more than we've ever had. This is not good enough. We want more, so we're going to not take our foot off the pedal. And that means that prices of collectibles and houses and stocks will continue going up. And I think there's a higher chance of that happening because high interest rates are bad for the government as well. So I'm interested to keep an eye on this. it's true that the market doesn't always behave the way you'd expect. So if everyone says we're going to get high inflation, then the chances are we're probably not going to get high inflation. And the same thing is obviously true the other way around. So we'll have to see how this goes. But currently, it looks like this is a good time to look back into the reserve list cards and see if there's some bargains out there. There might actually be. I mean, don't forget, a moderately played dual land still moves up and down with the market price, as long as that's a good entry for someone that doesn't want to spend an arm and leg for a lightly played or a near mint quality dual land. Because you've got to remember that a moderately played dual land could still sell for anywhere between $274 to $349, and it's only going to go up next year, assuming inflation's always going to be above 2%. The only time it won't be is if you're picking it up at the top of the bubble, and it's impossible to tell if you're in a bubble until the bubble pops. But I guess one of the best quotes is, the market can stay irrational for longer than you can stay solvent, which is pretty much, if you're expecting something to happen, the market's probably not going to do that until you've already gone too far, and then you get in at the top, and then that's when it pops. So you really got to be able to time it in a way that doesn't hurt you, which is have a plan, maybe once a month or once every couple of months, where you enter yourself into a market of some kind and move away from some of the dollars. I tell this, but I'd love to save as well. But I say that if you love to save, then at least have a certain percentage moving in and out of other assets. Anyways, guys, long-winded topic. I was trying to find a way to get everything that we were talking about in the past together. Is it a good time to buy reserve list cards? I personally think that it's always a good time to slowly enter into a market that you want to stay in for a long period of time. But two keywords, slowly and market that you like. So, that way it has value for you anyways. So anyways, guys, thanks for watching. Have a good one and see you later.